Thanks, Serena. Thirty-three participants. 34.
Okay, Serena, should I get going? Okay,
Thanks, she's
or we'll wait another minute until more people log on.
Maybe a little welcome.
Okay, all right, we'll give it another minute because it looks like the numbers are still going up in terms of the participants. So I have 12:02, so maybe start in 1 minute. Okay, all right, let's get going. So welcome everyone to a webinar hosted by the MIT Club on entrepreneurial strategies for the downturn. Obviously a very timely topic. It's not a coincidence. My name is Mark Cramer. I'll be the moderator, and we've got a number of panelists who are going to be helping us to discuss strategies for how entrepreneurs might deal with, well, the various things that are happening right now and are probably likely to happen more so in the future. So I'll start off with a bit of housekeeping. What we'd like to do is to as much as possible, to get feedback from, not to get feedback, to get questions from the attendees. So we've put together a Slido panel over here. Let me post it into the chat. So I'm posting this to everyone. Okay, so webinars can be a little bit awkward. I feel a little bit awkward right now speaking into my camera. It's very odd. But you know, in today's environment, we obviously can't do face-to-face panels, so this is what we're going to deal with. So if you click on the link that's in the chat, you'll be taken to a screen where you should be able to type any. Not only can you enter a question, but you can also vote up and down on questions that other people answer or that other people ask. And so I have a view to the questions that you put in. So feel free to do that starting whenever you like. The moderation has been turned off. So we're all adults here, we're all MIT. I'm pretty sure I'm not going to regret that decision, but keep it cool. All right, so let's start with the agenda. Pretty straightforward here. We're going to do some quick intros of the panelists and myself. I'll then post a question to the panel, and while the panelists are going through that question, I'll be looking at the other questions that hopefully the attendees will be posting in the Slido, picking the top ones, and then we'll just keep going until the hour wraps up, and hopefully everyone will walk away with some good information and some good strategies for your own entrepreneurial journeys, whatever those might be in the months or the years to come. Okay, so all right, we all know the news. We all know what's going on. I was going to start off this webinar by maybe giving some updates, but I think everyone's working at home and everyone's connected to the internet, so everyone knows what's going on. I don't think we need to revisit that. But we're in a very interesting time right now. That being said, if we look historically, if we look back at 2008, for example, we can see that even when things look glum, it's not necessarily, doesn't necessarily mean that there is an opportunity to start new ventures. So I'm not going to read all of these because you can probably take a quick look, and you can see which ones are doing. You can see that these companies have obviously all been very successful, and they were all founded during the Great Recession. So I'll also point out that the MIT Club has a startup mentoring service, and that was founded actually in 2008. So right at the start of the Great Recession, and since then, entrepreneurs have hundreds of entrepreneurs have gone through the program and received benefit and advice from the various people who have the mentors in the program who have helped these entrepreneurs to go on, and many of them have had great success. So that was an interesting time to actually start the startup mentoring service, and so I thought I would just point that out. So let's go through some intros and let's get started. So okay, so my name is Mark Cramer. I'm actually the director of the Startup Mentoring Service, to which I was just talking about moments ago. I was Course 6-1. Currently, I'm running applied AI product management at Park. I actually have my own entrepreneurial experience in a downturn. I founded a company in 2006, ran it for approximately a decade. So I was a CEO of a very small startup as we went through the Great Recession. I think that my lesson from that experience, and I think we're all going to be sharing sort of our lessons of our own personal experiences with entrepreneurship during downturns, is that not every microeconomic event is impacted by the macroeconomics, and certainly many of them are. And we're going to be talking about how the macroeconomics is going to affect whatever you might be doing. But at least for me personally, we were able to weather that storm, and it was pretty much unnoticed. And I think that just because you're in a certain environment doesn't mean you can't do what you want to do and launch the ventures that you want to launch. So let's go on to so Tom. I'll introduce Tom. And Tom, if you don't mind, maybe you can do a quick intro of yourself.
Sure. I'm Tom Rice. I've been with the Venture Mentoring Service almost since the start, or Startup Mentoring Service now. I've been around Silicon Valley all of my career, with just a few years exceptions here and there. I've been on all sides of the table, and I've been through all the downturns, the previous downturns. Let me highlight a good one and a bad one. In the dot-com crash, I was on the board and the ex-CEO of a company called Quantum Shift. We had raised 120+ million of venture capital. We were registered to go public, doing about a 30 million run rate. dot-com crash hit and our revenues went cut in half overnight. And we died by 1,000 cuts. The board tried to hang on to all parts of the business rather than focusing on one, and basically kept adding trickling amounts of money in, trying to hope the market would come back, and we never caught up. Sad end, fire sale, acquisition, and no return to the investors. I would contrast that with a company that I'm advising now that is in the augmented reality space, and they do sort of cheesy stuff. They do virtual face painting as a promotional for European soccer companies, for example. Their primary clients are sports teams and airlines, both of which are dead sectors. They had a side business with the University of Texas and Harvard doing some serious emotional evaluation of faces from video. And they basically have just put their core business on complete hold, and they're putting 100% of their efforts into working with the guys from Harvard, trying to bring out a product that sits on top of video conferences like we're doing now, or EdTech, and talks about the engagement of the people in it. Maybe that'll work, maybe it won't, but I'll tell you, the people at the company are excited, they're juiced. So sitting around, instead of sitting around mourning the loss of their past business, they're all going 100% in a new direction. Bottom line is, obviously, in the times of crisis, you got to make some tough decisions and go 100 miles an hour in whatever direction you choose. Thank you.
Hey, thanks, Tom. So, all right, let's go to Ken. Ken, are you there?
Yep, I'm here.
The floor is yours.
Can you guys hear me okay? So you can see that I've been out here in Silicon Valley probably longer than Tom, actually. I came out in '65 to attend Stanford MBA after getting out of course 15 at MIT. I'm the founder of a number of enterprise software companies, the first one being Ross Systems in 1972. So that's back when dinosaurs roamed the earth. I was also general partner at a venture capital firm, RRE Ventures, and today I'm an investor, angel advisor, et cetera, et cetera. And just, I'm still actually working as an active advisor for a couple of companies that are, as we speak, strategizing about how to manage in this downturn. And, you know, it's a difficult time. I've been through it a number of times, both as a CEO and as an investor. And I think my lesson learned is, you know, you've got to be tough. It's never pleasant to manage in a downturn, but for the company to survive, you've got to make a lot of difficult decisions in terms of products, in terms of staffing, in terms of cutting people who might be good, but you've got to have the survival of the company. And we can talk about that as we get on into the seminar.
Okay, thank you, Ken. Let me turn it over to Carl. Carl, you there?
Yeah, I'm here. Can you hear me okay?
Yeah, absolutely. Go ahead.
Yeah, thanks, Mark. Okay, so I started my career working for some big companies like organizations like NASA and DoD contractors, aerospace. Got into sales management. Then I got the startup bug and became sort of a startup junkie. I've been involved maybe 24, maybe a little more different startups that raised from $250,000 to $50 million. Had some experience working for incubators during the day, so a lot more startups. Co-founded a few that are still ongoing and still active. I'll try to keep this short, but I have two current businesses. One which is totally dead. It's an RV rental business here in Maui because it's on lockdown. Nobody's coming. And I have another business that's in a bubble where it's we sell energy efficiency data to the utilities, and the utilities are kind of in their own little bubble. Electricity goes on, money comes in regardless of what's going on so far. So my passion is for mentoring and coaching CEOs, helping them through tough times. I think that the key thing to remember here, we're all entrepreneurs at one level or another. Resiliency is the key element of being an entrepreneur at good times or bad times. And in challenging times right now, certain businesses are booming, going like crazy. Others are dead and dying. So I put together a few slides, which we'll pass forward, to help try to make some decisions and just to help you think about those issues. Because right now, being stuck at home with all the different scenario we're living with, sometimes it's hard to get sometimes it's hard for me to get my head clear above the clouds and say, what's really going on here? So that's what I would like to help engage people in those deeper conversations. So they can make better decisions on how to be the racehorse entrepreneur. Thank you.
Thank you, Carl. That was great. Last and certainly not least, Farzad. Farzad, are you there? You might be on mute.
I was on mute, sorry.
Oh, okay. You've got the floor.
Yeah, thank you. So I founded 3 companies. Actually, my first one, in fact, we were able to receive more than $10 million of government funding, which actually started in 2000. There was no other funding available. Sorry, I jumped in. You know, I'm also MIT, a bunch of degrees, and I've been in Silicon Valley for most of my life as well. 3 startups, basically. The first one, we had government funding, but then we switched to working with hospitals. We raised a successful angel round. In 2006, we went for VC funding. In 2007, and we had a major, they had $400 million in the last raise that they had done. VC very interested in investing in us, and they weren't able to, and so we kept hanging on, thinking they're going to be able to close their round, and then we will be able to get around 5 or 6 million. They couldn't close, and therefore we couldn't close. And if I had known that, I would have made a bunch of other decisions. I wouldn't have waited for so long, but as Tom was saying, in his experience, it was too little, too late, and we had to shut down most of the company. We sold most of the assets, and we kept one component of it that we thought was was very valuable, and then we started a second company in 2009 with that. So that was a better story. We actually raised around another $9 or $10 million of VC funding, plus some government funding just to get us started. That always helps, in some of the fields that government is very interested in funding. And I sold that company in 2016, and I've just been startups advisor, and just doing a lot of different things. I just started my other company a few months ago, and obviously I wasn't planning on the entire economy going so badly. So we're just looking at what can we do right now to make sure that we stay relevant, and the most important thing is to survive this. Yeah. I guess that's all I have to say.
Thank you, Farzad. That's great. Okay, so that was our esteemed panel, and so we're gonna now go to Q&A for the rest of the webinar. So as a reminder, I'm gonna pump this into the chat one more time. So here is the link: app.slide.do, that's Slido, and the event information. We've got a few questions in there and a few votes, but feel free to jump in there, type in your own question, or upvote the questions that are already posted. So while folks do that, I am going to go to maybe the first moderator question. And so the question is, how do you pivot during a downturn? How do you decide when to pivot? Even during this global pandemic, as Carl was pointed out moments ago, there are some winners. Like Zoom would be one. They were a winner. They're a little less than a winner, but they're still a winner. Citrix obviously be another one. Madison Reed, not a company that I'm familiar with. I think Ken, if I remember correctly, you know someone who works there?
Yes. Madison Reed sells home hair coloring kits online, mostly for women. And in this environment, it's going crazy. It's not a pivot, but it's a massive acceleration of their business from where it was 2 months ago.
Right, yes, so good place to be. So obviously we're not going to suggest that every entrepreneur switch to online hair color, right? Because that would be ridiculous. However, I think that, you know, some people are probably wondering, you know, how should I think about pivoting? When should I embrace that idea? How does one go about hitting the reset button when there is a pivot? So while folks are perhaps entering other questions onto the, oh gosh, I see that it's filling up. So we're going to answer this question, and then I'll go to the audience questions. So I'm not quite sure how we should do this. I can't see anybody.
I have a suggestion.
Go ahead, go first.
Just because I'm working with a company that's trying to pivot right now, and you know, it's relatively straightforward. I mean, and the way I'm working with the company, number one, we have very limited resources. So we can't go from what it's doing now, which is anti-money laundering for financial institutions. We can't convert that into online hair color. So limited resources. Look at the underlying technology that we have, and how can we pivot 5 or 10 degrees utilizing the technology, but perhaps in a slightly different way in a product that's more popular. So we're working under a lot of constraints, and I think that's probably the key.
Yeah, I think there's probably a couple of bigger issues to consider when you take on this idea of pivoting. I mean, and I thank you, Ken, for saying pivoting a couple of degrees as a versus 180 degrees, or closing it down and starting something else. I think one has to look at what's going up, what's going down, and what's going sideways. And you know, it's not a good time to open a restaurant right now, but it might be a great time to open a restaurant delivery service. Okay, so those are, what can we do right now to help people in the current situation? Yeah, we don't know how long it's going to last. It could be 3 months, it could be 6 months, it could be longer. Nobody really knows. But I think you have to step back and say, given what we do know, how's my business going to fare if I don't make any changes? And then what changes could help me get through this thing, and maybe have a big upside. So it's a real gut-wrenching type of reassessment for the world today. So I think while it's the questions of how you raise money are important, I think the question of what do you raise money for is probably more important.
Tom, Farzad, you have, I can't see either one of you, but.
Yeah, actually, I have a comment.
Yes.
So I'm not sure. I think fundraising is going to be more difficult. The valuations are going to be lower, and there may be just less money available because people are going to be tighter with it, or they want to take care of the existing portfolio. That's not to say that a company that's looking at solutions for COVID can't go out and raise a lot of money, but not everybody is doing that, or hair color for that matter. So you just have to expect the worst and then hope for the best. I think that's true, and then moving quickly actually does make a difference, because you just don't want to run out of money. I think that's the most important advice I've ever heard. Don't ever run out of money.
Yeah, so I'll go back to the example I gave in my introduction of a company that is pivoting from face painting for sports teams to emotional measurement on video calls. While they sound like very different businesses, it turns out the core face recognition and analysis technology is obviously very, very much the same. And so what I find in the successful pivots that I've been affiliated with is that the founders have sat down, usually with a team, usually with some board members, maybe some advisors, some key founders, whoever. They put together a brain trust. They sit down and they say, what is the core? What do we really do that's unique? And can that be applied to an area that matters and that is growing? And so in the case of the face analysis company I'm talking about, they pumped up a different part of their business And it turns out by doing that and by reaching out to their network, they actually, through the Harvard folks and some other people they already knew, may actually tap into some money, because it is for certain people, this sort of what's going on in a teleconference is an area where people are saying, we got to have this app, we got to have this app. And some people, maybe not, maybe, but if you look at what you really can offer and where it's needed, you just got to piece it together.
Okay, cool. Thanks, Tom. All right, so I'm going to switch to an audience question. We've got a few. I hope everyone has kind of figured out how to get to Slido. I'll post it one more time in the chat just in case. I also posted in the Q&A, someone asked the question, where's the link to Slido? And I answered it, so hopefully you can find it there too. This one is one of the top ones, and I think it's a little bit related to the pivot, so I thought I would just kind of throw it out there to kind of build off the discussion that just happened. Someone said, for the ideas behind your new business. So this is someone who's talking about launching a new venture as opposed to pivoting an existing venture. But the question is interesting. He or she says, were you more influenced by outside events, the downturns, or from your personal experiences? And if I can kind of guess maybe a little bit more about what this question is getting at, is to what extent should folks, entrepreneurs, build their businesses in relation to the macro situation, you know, the big downturns or the big events, versus perhaps the micro, which would be their personal experiences or the things that they're connected to, or the business experiences that they have the most relationship with. So I hope that makes sense. I think it's a good question. Anyone like to jump in and field that?
I can start. I think it's usually a combination of the two. Since this is going to be, starting a company is very hard, and it's just a lot of effort, and you don't want to do it just because of the environment. You do want to do something that you have passionate for or knowledge about, and you know that's really interests you and gets you excited and going every morning. But at the same time, you have to take into consideration the environment we're in. As we keep going back to opening a restaurant, that's probably not the best time to open a restaurant. And I'm not even sure a delivery service for a restaurant is a good idea either, because everybody else is doing that right now, and there may not be any restaurants left. But somehow you have to look at both.
I would just chip in, because when you think about the environment, is it the downturn or what's causing the downturn? So just because there's a giant downturn now, or there was one in 2008, might not be the driving factor, but the current environment might be, hey, if I'm going to develop, new diagnostic tests for future pandemics, or if I'm going to get into develop a supply chain application for PPE, that might be reacting to what caused the downturn, but looking at the business opportunity. Just like in 2008, you might have started not because of the economic downturn then, but maybe you saw that there was going to be a lot more regulation of financial institutions, and that might be a good opportunity to start a business.
Okay, anyone, Farzad or Carl, you want to jump in on this one? Or
yeah, I would just say, of course, you need both a good market segment and passion for the entrepreneur. But to me, the key is the passion. I don't know anybody who started a business because it was a good place to have a business that worked. All the people I know that are successful are passionate and knowledgeable about the space they're in.
Yeah, I can. I mean, I'm just the lowly moderator and not one of the esteemed panelists, but I can jump in on this one too a little bit. I think it's hard to plan your entrepreneurial journey around macro events or large you know, at the end of the day, every business is a relationship between the company and who's selling a product and the buyer. And that's a very local thing. It's a very micro thing. Certainly these micro transactions or micro events can be influenced by the macro world, but it's just hard to predict that. It's hard to work around that. I think it's certainly something you need to keep in mind, but at the end of the day, if you have the passion for something, you know, you got to be yourself, you do you, and, you know, eventually the world changes. And if you've got something, you know, there's a chance that you can be successful there. So, all right, let's go to maybe, unless you wanted to jump in on that. I mean, we don't have to have everyone answer every question, but if you want to go, you're more than welcome. No, Carl, you might be on mute. That's okay. All right, let me do another one. So this question has the most number of upvotes on Slido, but I don't know to what extent this question is actually relevant to strategies for entrepreneurs in a downturn, but I'm going to throw it out there anyway, just because it could inform how we might think about moving forward. And so an anonymous person posts, what do you think is going to be the shape of the recovery? And I guess this is, it's asking to do a little bit of fortune telling. If you look at the stock market over the last week, you would be forgiven for guessing that this might be the shortest downturn in the history of financial markets. But I'm not a market prognosticator, so I don't know what's going to happen next. I don't know how long this is going to last, but maybe one of the panelists, if you've got a quick, something quick to interject there.
I was just looking at Twitter and I noticed that my cousin, who's Andrew Ross Sorkin, just tweeted that he's perplexed by the stock market behavior. It looks like we're still in 2018. And I don't have any other comment.
How about this for the panelists, rather than trying to prognosticate, you know, what the market's going to be like, or what the economy is going to be like, how important is it to think about this as an entrepreneur right now? How much time should you spend contemplating it, and how much of an impact should it have on whatever decisions you think you might want to make moving forward?
So there's, you know, no question in my mind, historically, private venture financing sort of follows the lead of the stock market in terms of, you know, people's interest and valuations. I see Tom smiling a little bit, I think. But, you know, if the market continues to drop, then that's going to really impact private valuations. And if this is indeed the shortest downturn ever recorded and the market takes off again, then venture capital is going to come back the way it was.
And so as an entrepreneur who's contemplating doing something, what would you think?
I mean, you know, this is probably a terrible time to raise money unless you're a proven entrepreneur with a fantastic idea, or you're a company where investors have already sunk a lot of money into you and they are obligated to keep funding you to keep you afloat.
Yeah, I would simply say hope is not a strategy. And so I would not spend a lot of time figuring when the things will come back and betting on it. I would spend as much time as I can on putting my head down and trying to get something done given the constraints that are before me. So in other words, I don't know where the market's going, but I wouldn't put a lot of cycles into worrying about that. I'd worry about how to make my company survive and pivot into something that makes sense.
Okay, any other thoughts on the Do we still have Carl? Do we still have Carl?
We might have lost Carl. I think, as Tom said, the jury is really out on when is the actual recovery going to happen. We, this thing is not going to go away with just social distancing, and so unless there is a vaccine, we may not see the end for another 6 months to a year. I mean, we just don't know. So it's not a good idea to focus a lot on that, and really to focus on building a business, and to assume that what is the worst case scenario, and then can you actually live with that, and what would that mean to your business if nothing, if there is no recovery for the next 12 months.
Okay, thank you for that. We've had a month to figure out how to work Zoom, and I'm still fiddling with the controls, trying to figure it all out. I have so many things on my screen right now, but all right. We got another question from Sival, which was actually posted in the chat as opposed on the Slido. However, it's a good one. So I'm just gonna pull rank and just ask it to the panel here. You might even be able to see it, but the question is, well, talk about 10 things to do, or what were some gut-wrenching decisions panelists did in the past. You don't need to give 10 perhaps, but maybe can you talk about, in my entrepreneurial experience during the downturn of 2008, as I've already mentioned a couple of times, there weren't any particular gut-wrenching decisions that I needed to make or do, because we just navigated around it like it wasn't even happening. However, for the panelists who have had to make some gut-wrenching decisions, can you just talk about a few of them, how do you go through the process of making those decisions, and maybe how to turn out?
Okay, I'll join in. These don't have specific dates, but I know that when I was running my company in the 80s, and we had I can't remember whether it was an economic downturn or a self-imposed downturn, but we had very complex decisions to close offices. We had actually expanded. I remember we had offices in LA and Dallas and in New York, and doing some modeling, it was pretty clear to me that, the offices in LA and Dallas weren't, not only were they not profitable, but they weren't necessary. We were doing computer time sharing, so people were dialing up on phone lines.
WhatsApp audio.
Okay. Anyway, we had to close offices, and closing offices involved a lot of complexity, including laying off people and getting rid of leases. That's one thing. And just the other thing I'll mention, and I'll let other people chime in, because I said I'm actively advising companies now that are in the process of both cutting salaries and laying off people. And one thing that's come up twice, actually, in two of the companies I'm working with, in terms of salary cuts for top executives, the CEO is always stepping up to the plate with, a 30% cut, and he wants his other top executives to step up to the plate. And in both cases, one of the guys, maybe a gal, I don't know, in each company, and it's always the salesperson, is willing to do it, but his or her cash flow can't handle it, and he wants some special dispensation. And I've basically said, I've sort of advised that you can't, morally wrong to sort of treat people differently in those situations. And people either have to bite the bullet, or I had suggested potentially giving the sales executive the same cut that other people have, but then loaning him the money, but with a non-recourse loan, so that they were actually obligated to pay the loan back if in fact it wasn't reimbursed in some other fashion, right? But people are going through these heart-rending decisions now, and it's complicated. I'm gonna over and out. I realized after I finished talking, I gotta say that I'm done.
All right, thanks, Ken. Anyone else? It looks like Carl's trying to reconnect. It doesn't look like he's connected yet. All right. We're having technical difficulties with one of our panelists. Farzad, did you want to jump in?
Yeah, in my first company, we basically, at some point, we realized we just don't have enough runway. We still had a chance of getting some funding. So it was one of the hardest things I've done. We actually sat down, the management, all the employees, and we said, we have this much runway and we can pay this many people. And, we can only afford, I think it was very little. It was like, $2,000 a month a person which is, subsistence living in Bay Area. And this is what we can pay. And if anybody can actually stick around, and a bunch of people said, yes, we can. And, we also lowered the management salary to only $1,000. So it was even less than that. And I had like basically 10 people who stayed, and they were very motivated for 4 months. And, and we still had to lay them off at the end, but because we just couldn't raise money. But that was, people volunteered to stay, and those who couldn't didn't stay. And that was very clear.
Okay, Tom, did you want to?
Yeah, I'll give you a horrible story. So in the downturn of 2008, I had a high frequency stock trading company. My partner, co-founder, had some huge personal difficulties. He was going through a messy divorce. His son actually committed suicide. He lost focus during the downturn. Through human error, we lost a bunch of money in the trading system. And he was a longtime friend and colleague and wanted to keep going. And it was one of the hardest decisions in my life to just say, this is just a mess. It's not recoverable. And we got to go to the investors and say, we're done. And did it. Painful, 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 but probably the right answer to cut my losses.
Well, that's certainly a terrible story. But thanks for sharing. It looks like we do have Carl back. So Carl, you're on mute, or we can't hear you. No, we don't have Carl yet. He's out in the middle of the Pacific Ocean, so maybe that's part of the problem. I can see him smiling, but we can't hear him. Okay. Let me go to, while we try to figure that out, let me go to the next. All right, I see there's a top rated question here on Slido, but there's another one that I wanted to throw in there. And you know what, it's somewhat related to what we were just talking about. So maybe we can just build on that last question, but it's about extending the runway. And it's about what you can do. So Farzad was talking about the burn, and he computed essentially how much they could pay per employee per month. And I guess it felt like it was a kind of like a take it or leave it. But beyond that, or in addition to that, perhaps, what other strategies are there to try to extend the runway in this current environment with the COVID-19? There are some, I guess, novel programs that have been floated. There's the CARE Act, there's the PPP, and maybe there's other ways that people can think about cutting the burn, extending the runway. So would anyone like to jump in and talk about that?
It's Ken. So I've been reading some interesting articles just in the last couple of days, and it's sad, but I mean, people aren't paying bills, especially their rent bills. I just read an article, I think in the Journal this morning, that, it's interesting that only maybe, I can't remember, but 60% of consumers didn't pay their rent April 1st, but a lot of companies that are occupying office space that aren't using it have just quit paying their rent to use that as a lever to renegotiate rent with their landlords. And WeWork is one of them, for example, that's doing that. And in this environment, you
I'm
know,
sorry, Ken, you're saying that companies are not paying their rent, or
yeah,
people?
so I said two things. I said a lot of consumers aren't paying their rent, but that was an aside. Companies are not
I
paying
didn't know
their
that was
rent.
an option.
Well, you know, if you're a company and you don't write a check to your landlord, it just depends on what the landlord is willing to do or not do. And in this environment, you know, the landlord doesn't have a lot of options, and a lot of people are trying to renegotiate their rent, which probably in San Francisco has been astronomical. And I think all the landlords are starting to see that this work at home business is going to get bigger, even after the crisis gets down, is lowered.
Just to add to that, Ken, during the last downturn, we renegotiated with our landlord and didn't pay rent for 2.5 years. I mean, I'm not promoting that, but there was nobody else who wanted that space, and he's like, "Why don't you guys stay?" And tell me, you know, when we negotiated, it was a 5,000 square foot space. It was huge, and there was only two of us, you know, in our tiny little offices, and but there was no use. He couldn't make any money, and eventually we raised money and we paid him off, and so it was a win-win. But we didn't pay any rent for 2 years.
So the lesson or the strategy there is go to the people to whom you owe money, whether those be lenders or the people, and negotiate, right? And
yeah, and I mean, while it may have some moral implications, I mean, if you go bankrupt, they're not going to get their money anyway. So I think this is sort of a matter of doing everything you can to survive, and having all of the stakeholders participate in some fashion, whether it's voluntary or not voluntary.
okay. Anyone else want to jump in there? Okay. All right. The highest rated question on Slido is not even a question. It's just an observation. Anonymous would like to check people's hair color after the shelter in place is over. Mine will look just like this. So, all right.
No hair, no hair.
Yep. So mine is not going to change. Okay. So there's a question here about whether or not there's going to be a persistent advantage for healthcare related companies, sort of diagnostics and therapeutics for infectious diseases. So I don't know if on this panel we have anyone who's like specifically has healthcare.
Actually, I have healthcare experience.
Okay, well, that's what I was going to say. I was going to say Farzad.
And actually, this is a terrific time to go after government funding in this space. It's like all the various agencies, BARDA, Air Force, Army, Navy's not so much, NSF, NIH, they're all throwing a lot of money at this problem. And in fact, they're saying they're going to fast track funding. And it could be anything from a concept to a fully finished product, anything that will help. And they're not looking for stuff that's in the next 3 months. They're looking for long-term solutions. The government tends to overreact. You know, they tend to say, okay, we don't want to just solve the local problem. We want to be able to make all infectious disease and all of this, you know, anything related to this ever coming up go away. And so for the next 1.5 years, there's going to be a lot of funding in this space. We can't hear you, Mark.
Sorry. Anyone else on healthcare related startups?
Yeah, I've got
Carl. Carl's back
yeah.
from the middle of the Pacific Ocean. So go ahead, Carl.
Yeah, so sorry I missed that, guys. I was able to hear it though by dialing in on the good old cell phone. Internet was down. So yeah, I just want to comment on the salaries and things. I think transparency is the biggest thing to tell your people what's going on. Look at the budget and make some tough decisions. If you want to stay on, here's what we can afford. If not, you have to do something else. And so be it. On the government idea and the healthcare, I have one company that's active that I co-founded, called Geovisual. They do ag tech, AI and ag tech in Silicon Valley, and Salinas Valley and Yuma. The big upset now, they can't sell to the restaurants. They got to change the distribution system. And so there's a lot of confusion around how to do all that. But regardless, there is all of a sudden more government money from agriculture. There's more government money on how to figure out how to solve some of these problems to keep essential things going. So I think it is important to, before you make any other decisions, think about what government money is available, because there's a lot, if it's relevant to your business case, because there's a lot more money and they want to spend it and they want to do something quickly. Now, quickly for the government may not be quickly for entrepreneurial time frame, as we know. They're trying to get money out for payroll and they can't do it because they're all jammed up and the banks don't want to do it and so on and so forth. So, but I funded a couple of businesses through government and angel money. And that's another resource that's opened up quite a bit. They're trying to do it with trillions of dollars. So take a good look at it.
Thanks, Carl. I really like the note about transparency. So when I was the CEO of my startup, we had a downturn. It wasn't the downturn. It wasn't a macro downturn. It was our little micro downturn that we had, sort of like near the end of the road. And so I just felt like not only was it the right thing to do, but it's also, I think, an effective thing to do, to just let the team know. This is how much money is coming in. This is how much money is going out. This is how much time we have. These are our options. This is what we're going to do. So I think no matter what the situation, whether it be sort of a macro downturn like a pandemic or a market crash, or a micro downturn, which could be your own personal situation with your own personal business or whatever, I think transparency is good. Got another question here on the Slido. The top, all right. Two of the top questions have to do with raising money. And okay, so it's a very generic question from Anonymous. Is it a good time to raise money? And if no, then when? And another person asks for a very early stage company, how should you think about fundraising at this time? So these are pretty generic questions about fundraising. Obviously, we can't control the macroeconomic situation, but any thoughts about what a startup entrepreneur could do with respect to fundraising today?
Well, I had one company that I co-founded called LED Lighting Company, and we had sales, we had profits, but we couldn't get a VC in the U.S. to fund it, other than an angel level or the first round. So we wound up we found somebody who, a VC who wanted our type of company in their portfolio. So they funded us. We were one of the tops in that category. So, and then for the later rounds, for the $20, $30 million round, we went to Al Gore's thing in London. So we had to actually leave the US to get funding for the startup. That's not an easy thing to do, but if we didn't do that, we never would have got our $50 million. Think out of the box.
Yeah, okay. I actually I'm on a Crunchbase News, and I get funding information to my inbox about various companies that are getting funded. And there's still a lot of activity going on. I'm actually kind of surprised to see some of the huge rounds that are still being done, like this week. I had a list of them on hand, and I don't have them right now, but there are 50 million, 100 million, even multi-$100 million rounds still being done for various companies, as well as the small stuff. Because I think the venture capitalists who know what they're doing understand that this is a very long road. The horizon for their investments is a very long period of time. So typically it takes 7 years for an exit to happen. So what's the world going to look like 7 years from now? Who knows? What's going to look like 7 weeks from now? I don't think we really know. So So you have to kind of have, so they have that mindset. And I think that if you come in with the right business, you can take advantage. So we're getting close to the top of the hour. Want to definitely wrap up on happy notes. So this entire webinar has been around downturns and sadness and laying people off and companies that are suffering, entrepreneurs that are struggling. But maybe we can just go around the panel and talk about, well, you know, the future, right? And so things are certainly hard now. Things are always hard for entrepreneurs, by the way, just period. Like it's never easy, even when it's sometimes easier, but it's never easy. So, but any thoughts about the future, about things to look forward to, about, you know, entrepreneurs eventually figuring out how to use Zoom, things like that?
Well,
Yeah, I mean,
Things always look bleak at the bottom of the market. So, you know, in the long run, I'm sure things are going to be a lot better than they are now.
when you have crises like this, they accelerate change. So the things that were going on, work from home, hoteling at work, teleconferencing, telemedicine, all of those trends are accelerating. And so if entrepreneurial world is finding cracks in the existing market and filling the holes with new products, this is a great time to be an entrepreneur. There are tremendous opportunities because the downturn is accelerating the change in the market, accelerating people's reluctance to let go of the old ways. And so, you know, there's a lot of good stuff out there. You got to deal with the stuff in front of you, but there's opportunity everywhere.
Anyone else?
yeah, that leads me to Schrodinger's virus. As MIT guys, you probably all know about Schrodinger's superposition principle. Basically, we can't get tested, so we don't know if we have the virus, all right? We have to act as if we have the virus so we don't spread it to others, but we have to act as if we've never had the virus, because if we didn't have it, we're not immune. So just like in business or in Schrodinger's paradox, we have to act as though we're going to create something with enthusiasm and there's an upside to be had and it's relevant. At the same time, we're stuck at home with kids and family and lockdowns and lots of other economic problems, which are very difficult. So you have to be in both worlds. You have to continue to do it as though it wasn't happening. At the same time, you have to take it in. Hey, the world has changed and we got to adapt, pivot, or whatever you got to do, raise money, solve all those things to make something sustainable. Not easy, but
Farzad, you have a closing thought?
The only thing I would add is having a successful business of any sort is going to be a lot easier to hire people. I mean, a month ago, nobody was available. It was really, really hard to hire anybody in Bay Area. And now we're going to have a lot of competent people. So if you have a good idea, you don't even need to pay them the outrageous salaries that people in Bay Area demanded. You may be able to get people to help you for free, just the idea of working on something that's going to change the world. So this is a great time to start a company.
Yeah, I think so too. I remember thinking between 1999 and 2000, compared that to 2002, 2003, I felt like that crash weeded out the weak. And so if you're an entrepreneur, you're certainly not weak. And so, you know, it just, the amount of noise was reduced. And so when you reduce noise from the system, there's just a greater opportunity to actually see the signal. And so times like this, I think the strong signals will prevail. So with that, I would like to thank everyone for attending. I posted a link to where the slides are going to be available in the Q&A. I don't know if there's another way to share that. I think I also put it in the chat. Carl very graciously added some supplementary slides, which are going to be packed at the end there. Plus, we've got some email addresses for folks if you want to follow up with any of us with additional questions. If you want to be involved in the Startup Mentoring Program, feel free to contact me. my contact information is out there as well. We're always looking for strong entrepreneurs as well as strong mentors. And so I think, oh, and someone is telling me that we are going to carry on the conversation on our Slack channel. So if you're not on the Slack channel, no, hold on, got to send this to everybody. I just pumped it into the chat, mitcnc.slack.com. You should join if you're not on it yet. And oh, someone is sharing something. So, okay. I think that's it. Serena, I don't know what happens now. Do we just say goodbye? Does it end? Does it shut down? Webinars are weird.
It's up to you guys. We can
I think that's it.
We can end it now. That's fine. So
Yeah.
thanks everybody.
Okay. Thanks to everyone. Thanks to my panelists. And thanks
You're
for
welcome.
Serena and Suja for setting this up.
All right.
Okay.
Bye.
Take care.